what is lot in the financial market? What is PIP? What is stop loss? So in this video, I will explain to you all of that. My name is Frank Vegeta from Villageois Trading. You need to know that at the beginning, when the economy started back in the days when we were not yet born, all of us, we were doing battering between, if for example, you wanted to buy a product here on the right side, right? Here, there's a product that you want to buy. You want to buy fish, for example. You want to buy a fish. You needed to come with corn, right? You needed to come with 3 pieces of corn, right? And then you wanted to have, if you want this fish, you needed to have 3 pieces of corn to exchange it. That's how, at the beginning, when we were doing bartering, we started economic transaction. But with time, humans started having problem of trust, a trust problem. So they created another means to have that fish. This is still a product that you want, right? This is still a product I want. It is fish. But now humans created a legal piece of legal coins, right? They said that, okay, if you have now 10 coins like that, right? Coins. 10 coins, right? You can give me, and then you have my one fish. So coins now were replacing corns because now we converted. Yeah, we converted three corn into conversion into 10 coins, right? We put and we call those coins that money. Money because it had a currency name. The currency name could have been franc CFA, it could have been Naira, it could have been USD dollar, it could have been GBP. Those are the name of those coins, right? Depending on the local country that where you belong to. So in the financial market now, something happened also. When we turn to financial market, when we're trying to translate the real life into the physical life into a more digital life. So now in the financial market, the product are like those currency that you want to buy, right? You want to buy and sell those currency. We already know that the currency ratio, like the currency quotation, you want to buy or gold, the digital gold, the gold, cocoa, right? Or cocoa, or even corn too. You can also buy corn, silver, oil, Bitcoin, right? BTC. Those are financial products that we want to buy and sell in the financial market, right? So now, how do you buy this? You buy it with what we call a bag, right? As I told you, this is a bag. That bag name, this bag brand is called lots, right? So what will you do with this lot? You literally take this coin, put inside the bag. When you put inside the bag then take the name of lot, right? Because you convert now franc CFA, the conversion, right? Into what? You convert it into what? Into lot. That's what you are doing in the financial market. You convert USD dollars into what? Into lot to start buying product in the financial market. Because the currency of the financial market is the lot. The currency of the financial market is the lot. This one is the currency of the financial market. So financial market work with the currency called the lot, right? Because the price is the quotation, right? This is the currency of the financial market, FN. So that's how things started, right? That's how things started. That's how things has been converted. That's how things have been has been working back in the days. So how do you convert it then? How do you convert your franc CFA or your dollar or your naira into lots? You need to have. Let us say that this is you or me. the person who want to start investing in the financial market. And as I told you, you have all of your capital like this. Let us say I will take all of this capital, all of this will be 5,000 francs CFA. 5,000 francs CFA is I write so badly. I write zero like six. It's basically $10, right? Roughly, right? $10. So here, this part will be the part that you will be investing a percentage of your money, right? 1,000 francs CFA, not all of the 5,000. What you risk is 20%, 20% risk, right? You risk just a part of your money. It's like your elder sister send you in the shop. This is you, right? Your elder sister send you in the shop that take that 1,000 francs, go and buy bread for your little sister named Cynthia. So when you go to the shop, when you arrive to the shop, how much money are you risking for to buy one bread? Only 200, right? 200 francs CFA, right? So that 200 francs CFA is how much percentage compared to your capital? Your capital here is what? Is how much? Your capital is 1,000, right? To buy what? One bread. That one bread that you go and buy in the shop is a risk, right? You can go there, you arrive there, are only dry bread, like dry bread. That's the risk. So that risk is 20%. 20% of what? Of 1,000 is 200 francs CFA. So it's the same thing. You only invest this part, right? That's it. We already know that this is your risk, your percentage of risk, right? That you put in the market. So what happened is that, first of all, you need to have, you take that 1,000 francs, right? Let us say you take that 600, let us say 600 francs CFA, right? You put in your orange money. Orange money is the place where you can actually easily enter. You put in orange money. Now, from orange money, you put in your broker. Because broker, to put in your broker, you don't put it in your hand. You need to put it with orange money. That's why I take orange money too. So this year is still 600 francs CFA, right? Now, before buying now the financial asset, you need to convert. At this point, you need a conversion into lot. So yeah. So before coming here and press the button buy, because the financial market, this financial market FM here only understand currency that's lot. So when you put 600 francs here, the conversion, right? This is the conversion sign, right? There is one bag. The first bag, this is the smallest bag, will be one like this, will be 0.01 lot, right? We call it the mini bag, right? We call the mini bag. Mini bag also means mini lot. And then this 0.01 just means $1. That one that you see here, that one here is just $1. This one, when I say that one here, you can see. This one, I did not change the color. Let me change the color. This one here means $1, right? That mini bag is $1. And then you have now, if you have more money, and then you can go in a larger bag. The larger bag will be $10. You first of all put 10. So it will be now, this one will be $10, right? So this one will be the micro bag, right? Micro bag. That micro bag is 0.10 lot or 0.1 lot. It's also a lot, right? Now there is a standard bag, what we call standard bag. The standard bag, right, is the value of the standard bag in dollars is $100. So you put 1.00 like this. That's in lot. So you see that it actually this lot is almost like $100 because it has one, this one, 0, 0, 0, and 2 0 after. So So if you have, for example, 600, right? You take this 600, right? You need to convert it into lot first. And when you take this 600, that 600, come on, you put it inside this bag. So the number of money that you will be buying in the financial market will be 0.01 lot. So because the financial market here doesn't understand dollars and all of this, I'm just converting, I'm just showing the value. It's the same thing if you have $1. If you want $1, right? Which bag your $1 will go on? If you are risking $1, which bag? It is inside this bag because this bag is the value of it is $1, right? Now if you have $10, from $10 is basically how much in France CFA? $10 is 6,500. Let me use this color. $10 is 6,500 francs CFA. When you have this and you want to convert, your money will come inside this bag instead, because the $10, because this one is $10, right? This one is $10, right? It is this lot bag, because if you put in the small bag, it will not fit. It's like can you put 1 million francs CFA in a small pocket, that back pocket that you put on your that hand pocket. 1 million francs CFA is a huge stack of 10,000, even 10 million. So you will not fit. So this $10 will go on the micro bag, right? We call it micro bag. So for this 6,500 francs CFA, what you will buy in the financial market will be 0.10 lots, 0.10 lots like this. This will be the money that you will go and buy to invest. Now, if you have $62,000, that is how much? 62,000 francs CFA. That is $100, right? In which bag will it fit to convert? That's $100. In which bag will it fit? In the last bag, the bigger bag, the standard bag, because this is $100. You cannot put that $100 in this small bag, the second bag, because it's too small. You need to put it in a standard bag. So when you go and buy in the financial market, you buy one lot. We call it one lot, right? Call it one lot. That's basically it. Let us say, for example, now that you have, rather than for the small bag, let us say if you want to double the money, rather than having 600 francs CFA, right? You instead have 12,000 francs CFA. 12,000 francs CFA will be, no, not 12,000 francs CFA. You have 1,200 francs CFA, right? 1,200 francs CFA, which will be $2, right? The money in this bag, when you put, it can fit inside here because it will just be 0.02 lot. You are just multiplying this back side by 2. It's like you are just taking two small bags like this. One small bag is 0.01 and the second bag is 0.01. So the maximum size will be 0.09 like this, right? So you can actually take those two back. Like actually, you can fit till 0.09 lots. So that's it. It's the same thing like here, the second asset, the second price. If you have instead 12,000 francs CFA, right? 12,000 francs CFA will be roughly $20, right? When you have $20, right? You can actually put this bag value is $10. You can actually put times two, which will be 0.2. That $10 is just this 10 at the end. So basically, that's you understand the explanation, right? It's the same thing. So each lot has its bag, right? Its bag, the amount of money that you convert when you convert, right? Why do we use lot? It's like, remember when you have a bottle of water like that and you put liter there. There are some bottle of water out there, they say 0.5 centiliter, right? This centiliter is the lot, actually in forex trading. This centiliter is a lot. That's why when you see 0.5 like this, it's the same thing like I say here 0.10. They are small bottle of water, right? Centiliter is a unit to calculate the liter of water, right? So lot is a unit to calculate the liter, the volume of money that you put inside a bag. That is the same thing. That is the same thing. So those bag is the volume. So that's all for this one. Now let us look at so, let me show you the lot formula. Basically, there is a lot formula. Lot formula is a mathematical formula that you don't need to remember, to be honest. It's just for me to give you it. And if you don't remember, don't even worry. Computation calculator are there. Lot formula is your percentage of money that you risk multiplied by your initial capital. Your capital or your account. Capital here is your account balance divided by the value of 1 pip. The value of 1 pip, right? I will show you how to calculate pip. Multiply the price of the asset. That's now, right? The quotation price of the asset. When I say asset, I will say the financial product that you are buying. It's like, for example, if you are risking 20% of your capital, and your capital is here 5,000 francs CFA, right? Divided by the value. So the value of one pip can be $10, right? 1 pip can be $10 multiplied by the price of the asset, something like that. So 20% of 5,000 is 1,000 francs, right? Francs CFA, divided then by 10 the value of 1 pip. At the end of the day, you don't need to. You should not have francs CFA here above. Normally, you should have dollars. That should be 20% of something dollars. 20% of $10, right? $10, because the denominator will be in dollar, and this $10 multiplied by the price of the asset, something, and it will give you an answer that is like 0.12 lot. That's then this that you put inside the financial market, inside the MetaTrader for MT4, somewhere in the middle here, like this 0.12. So that's all for the formula, but you don't need to remember about it. There are calculator that help you do that. So now let us do then. Okay, let me show you what is a pip. How do we look at pips? So there are there are pip for pair that don't have pip, right? A pip. As I told you, that pip is like the unit of the phone credit call when you want to call somebody. For pair that don't have now GPY, I said pip is a unit. How do you calculate that unit? First of all, you know that, you remember that in the financial market, we have the price that is going like this, right? Let us say this one, and this one is your entry price. This is when you want to buy. You want to buy 1.10798, right? And here is 1.09865. So as you remember, this one, when I do like this, you enter here to this is your entry price to buy. This entry price to do what? To buy, right? This is your entry price where you buy the asset. Now you need to have a stop loss where even if the market go down, you exit your position without losing too much. That's what you risk, right? This is your stop loss price. So first of all, to calculate a pip one, you need to do entry This is the formula, entry. This is the first step, entry minus stop loss price, right? Minus stop loss price, which will be equal to 1.10758. Those are for the pair that are not GPY pair like euro dollar. That doesn't have GPY, euro USD or GBP USD. You see that none of the product here has GPY, right? That's why there are many numbers at the end. So it is 1.10758 minus 1.09865. When I divide like this, how much does it give? Does it give me at the end? It will give me 1.10758. 1.10758 minus 1.09865. It will be 0.00893, right? Now, that's the first step. Now, the second step, you need then to drag the comma. This is the comma, right? This is the comma. This point. Drag the comma to the right. Right? Drag the comment to the right by 4 digits. 4 digits to the right. 4 digits to the right, right? It means that what? This is the result of this subtraction. This is the result of the subtraction. In this subtraction, not in the price on the chart. In this subtraction, for the subtraction, you say first digit to the right, this is it. Then second digit, then third digit, then last digit, the point will be there. So now, when you finish dragging the point to the right, you have something like this. The point will be after 9, like this, 0.3. So now the pip now will be 89.3 pip. This is the number of pips now. So you need to drag by 4 digits to the right for pairs that are not GBP, GPY pairs. So now, let us take now GPY pairs. I said GPY pairs now, Japanese pairs that has Japanese currency inside. Let us say that here is 151.594, right? And here your stop loss price will 151.213, right? So you know the procedure, right? The procedure is entry price minus stop loss price equal to what? Because this is your stop loss, you buy here for you. When you buy, you are expecting to add money to the upside. So this is your entry price and stop loss price. So you have 151.594 minus 151.213. That will give 151.594 minus 151.213. The result of this is 0.381, right? 0.381. Now for GPY pair, you drag the comma, the point, drag the comment to the right too. The comma to the right by 2 digits only for pair that has GPY. So this is the starting point. I mean the point of the result, not the point of the price there, the quotation point. The result of this minus this result. So this is the starting, then one number to the right and second number to the right. So this gives you something like 38.1. So the pip now, it is the number of pip now will be 38.1 pip for this GPY pair. So, so that's the example. That's the rough example, right? So I think it's good now for the example. So that's how you calculate it. You need to drag. So that's how you calculate the pips. So in summary, how do you make to have lots? How do you convert your franc CFA? Like how do you convert US dollar? Let us say US dollar into lots. So basically, first of all, as I told you, you need to have here your capital. You need to have a capital, right? A capital of money. So after you have your capital, you then have here a percentage of this capital. So if this one is all your 5K, if this one was all 5K, you have $5,000. A percentage, a piece of it is 1K. That will be 20% of your capital. So, so, so here you have your risk. So the number two things that you need to have, you need to know how much you risk. Yeah, like your risk percentage, right? So after that, uh, now when you have your risk percentage, now you need to know your pips, right? I'll show you how to calculate pips for pairs that doesn't have, for financial product that doesn't have GPY, that don't have GPY, and those who does not have GPY, right? That's how we classify it in forex market. And then for now, for now, after that, you need to understand, you need to know your stop loss price. If that this is the chart like this, you know that if you buy at this level, you will put your stop loss at this. This box will be equal to the percentage of what you risk. This box will be the percentage of what you risk. This is what we call stop loss. This box is not all of your capital, it's just the percentage, your percentage of risk. That's why you need to have a price here, 1.10 something, right? That's then your stop loss. You need to know your stop loss price. When you stop, in case you lose some money, but you lose just small, and then you expect to earn a lot to the upside. And then after that, now you then need to put the money, like your franc CFA. This is your franc CFA. You need to put it in the broker, right? In the broker. Then before buying, then you need to convert. This is where you convert into bags. This then lot bags. The smallest bag is 0.01 lots, right? That's the mini bag, the mini lot. And then the micro bag is $10, so 0.10 lot. The value of this is $10. And then the standard bag is $100 value, so one lot, right? So after, when you have lot now, you then go on MetaTrader 4, MT4 or MT5, all of the same. You put the value of the conversion. Because the lot is the things that we all want, but that lot depend on the risk, depend on the pips. Your risk already have your capital. When I say risk, it's risk on your capital. Depend on the pips, depend on the financial asset that you will be choosing, maybe USD GPY, right? And then maybe it will give you 0.03 like this, and then you put it here. You put 0.03 on MetaTrader 4, 0.03, and then you buy now, and then you start making money out of it. That's how you make it. That's the resume. That's the resume, like the summary. Okay, so now let us go now on the chart. Let us go now on the chart so that I can show you it a little bit simpler. A little bit simply with live example. To show you with live example, as I tell you, here we had what we had here. We had simply you and the real physical market here, right? The picture did not show. And then in the middle, you have the digital market in the middle, right? So all of the things that you need to know about it will be the broker that you will choose depending on your country. The metadata for the capital, your risk, the first pair where you risk in a GPY pair or a non-GPY pair, and then the PIP, your lot, right? I explained to you that. So basically, let us take an example in the chart directly. Let us start with a pair that's not a GPY pair like euro dollar. Euro dollar does not have GPY. So let us take this example, for example. Let us say you want to buy here. You wanted to buy here. So you come here, you take this tool. This tool, you let us say we wanted to buy here like this. Focus on the red part. So since you wanted to buy here like this, your entry price will be this price, this gray price. You buy at this entry price, and then your stop loss price will be here. So this gray price is what? How much? 1.04909, right? And the stop loss price is this red, 1.04812, right? So now we go in the calculator. In the calculator, the first step is what we take the entry price. This is when you buy, where you buy the entry price, right? You will take 1.049 1.04 1.04904 minus 1.04812 1.04812 equal to how much? 0.000. So the result of the subtraction of it is 0.00097. You know that when you have 0.0097 like this, what's the next step after the subtraction? You need to move the digit to the right by four number. First of all, this subtraction, this is the result here. On TradingView, this tool compute the difference between the entry price and the stop loss price automatically. You see this stop on the red box here, on the left right here. It's 0.00030 after the comma and 97 at the end. It's the same exact thing that we calculated, right? Now let us move the digit to the right. When I take like this and then I move the digit 1 time, 2 times, 3 times, and 4 times. At the 4 times, what do I have? I have 0, 0, 0, those 3 0 like this. And then the number 9.7 now. So basically the number of pip is 9.7. It's just 9.7 pip. So you realize that this tool gives you the number of pip automatically in the middle here. This is 9.7, this is it. So you can check this tool here, long position and short position. Long means buy position. Short means sell position. So you just take it here. That's where I took it, this long position on this tool. So this for non-GPY pair, like Yoji, the pair that doesn't have Japanese currency there on it. Now let us take a pair that has a Japanese currency on it, like this one. Let us take like this, and then we make a purchase here. So we buy here, we click on buy here. So the entry price will be this price, this gray price, 153.500 and this is 5 and 76, right? And the stop loss price, the SL price, right? Yeah, this is the entry price. The SL price will be 153.494, right? So the first step is to compute the difference between the entry price and the stop loss price. So I will take 153.500 and so I'll come here 153.576 minus 153.494. 152.494. 494. I didn't put point 494 equal to what? 0.082. So the result that I have of the situation is 0.082, right? So when you take this tool, you see that you have the same result here, the subtraction between the two prices, right? Now, but the PIP now will be this one in the middle. It's because now we need to put the number to we need to, for DPY pair, drag the comma to the right one time, for two number to the right two times. So you have something like 0.008.2. So the number of pip here at the end is 8.2 pips, right? Because the zero in front of the pip, we don't read. The zero before a number that is not zero, we don't read. Even after, we don't read. So it's 8.2 pips. That's the simple mathematical calculation that you need to know, 8.2 pips. That's the simple mathematical calculation that you need to know. We all know, like, that's the primary school type of mathematics. So that's it. That's how you calculate it. This is the number of people. That's then the formula. That's what I wrote here on the Google sheet at the bottom. You remember I told you that the entry price and the stop loss price. So when you have the subtraction, I just take the column K44, for those who master Google sheet, minus the stop loss price, right? I have this number for the GPY pair. It's the second digit after the decimal point. Yeah, I put the digit two times to the right. That would be 37.8, right? So 37.8 from this number is like, I'll take this number and multiply by 100. If I take this number and multiply by 100, it will be 37.82. So if I just multiply by 100 for GPY pair, I have the same thing. Now for pair that are euro dollar, for example, that are not GPY, that doesn't have GPY in front, I've dragged the number to the right by 4 decimal point. It's like this subtraction of these two numbers, right? I subtract the entry price minus the stop loss price. I have this result. I then drag the comma to the right one time, two time, three time, four time. I have 42.8. It's the same thing like multiplying this number by 10,000. By 10,000, 10,000 will be just 440 after. Like, it's simple mathematics. You have the number of people. You can calculate it with your eyes, or multiply it with a specific number, or you can use this tool directly. Because if you drag like this, it gives you the number of people till this price from this entry, because I increase the number of people, right? 24. So the reason why you calculate the number of people is because when you go in the calculator like this calculator, right? When you go in this calculator, there's a part here on the right of the calculator in the Android that you need to put the number of people. That's why I show you to have the lot, because you see that the lot is the last thing that you have before buy or sell, right? Before you buy or sell, right? The lot is the last number that you have before the lot thing that you need to know before you buy or sell, right? So to have it, you need the pips, you need the percentage of your capital in this computation. I advise you to download this on the App Store. That's the calculator that you need to download in the App Store. That's why you need to calculate the number of pips. So I think I'm done for the lot. That's the last thing that you needed to start buying and selling and making money in the financial market. That was the last thing that you needed. So since that was the last thing that you needed, now to start buying and selling, for you to not lose your money anyhow, you need a professional training. I said that to analyze this financial market, you need a professional training to start earning. How will you know that this is the right time to buy so that you can have a return on investment? Because if you buy here and then this stop loss were like 1,000, if you buy here and this stop loss were 1,000 francs CFA or $2 or 1,000 francs CFA, you know how much money, you know what is the risk reward? If you click on this tool, you will see ratio risk reward in the middle here, 3. It means that you take your 1,000 and multiply by 3. take your 1,000, right? You multiply by 3. So arrive here, you will be having 3,000 francs CFA in a matter of minutes, right? Only you using your string. How will you know that this is the right time to buy, right? Because if you buy inside here, above here, and then you put your 1,000 inside this red, you'll be losing all of your money. You will not, because this price will not be going up with your money, will be going down inside. So how will you do to not buy at the top and to not buy at the top when the price is going down now? Don't buy when you need to sell and don't sell when you need to buy, because you can also make money selling, right? If you have sold here like this, for example, at this level, because it's the same computation. You can just sell here, sell for 1,000, a product of 1,000. You could have just make all of this money to the downside. You could have just make all of this money. I mean, selling here and making this money like this till here. That will be 9 times your money. So you will be earning 9,000 francs CFA. 9,000 francs CFA, which is roughly $20. $20, right? From risking $2, right? $20 or less than $20, I don't know. So it's 9 times your money because your risk reward is 9 times. So that's what when you use financial market, you are doing. That's what we call trading, buying asset in the financial market. So how will you know that this is the right time to sell? So you need to have a professional training. So you need to upgrade from this small training that I just gave you. You need to upgrade to a professional training. That's why you need professional training to know how to master financial market and make money out of it, and and generate more capital, more money. So to earn more money in financial market, you need a professional training. With that said, jump in the next phase of your training, of your adventure in the financial market, and become a pro trader, somebody, a professional investor. All investors are here. All investors are here. Let nobody turn your head. All investors are inside here. That's how you make to buy this Bitcoin. How will you know that this is the time that you can buy the Bitcoin, this Bitcoin? So jump into the financial training for the next. Let us see for the next financial training. Financial training, the financial training to be an investor, a professional investor. That's the pro training that you need to do next. Don't just stay at this level. Jump to the next. Now that you know this, see you in the next phase.